If you're still losing trades using supply and demand, it's not the strategy, it's how you're using it. In this video, I'm going to show you how smart money actually uses supply and demand to trap retail traders and how you can start winning with it. Alright, now let me show you something on NZD CAD. This is actually a trade that I'm currently in. Today is the 30th of March 2026. And as you can see, it's a very simple trade. We've got a clean supply zone at this area. Price taps into it right at this point and moves away. Right, so these are the type of trades that you want to be looking for. Right, no indicators, no guessing, just understanding where the money is as the smart money moves. So as we look at this chart, we can see that price is in a clear downtrend. Right, that's the first thing that you want to determine when you open up any chart or any time frame. You want to understand which structure you are in or which structure you're looking at. So as you can see, price has been making lower lows and lower highs. As you can see, breaking structures to the downside and giving us continuation patterns, which is your drop base drop. So as you can see, this is a very clean supply zone, and I'm going to talk about how you can actually filter out these supply zones and look for supply zones which, you know, have a higher probability of actually playing out. Right, because what people do is they draw these supply zones all over the place, right, and that will usually lead to you having a lot of losses or you making a lot of mistakes. So we will filter out certain confluences you can look at, take better trades when it comes to supply and demand. In this video, you'll be able to understand how to mark strong supply and demand zones, as we always try to filter out these zones in order for a higher probability of our setups actually playing out. Most mistakes traders make is, you know, obviously if they open up a chart and don't really understand what they're looking at, they see supply and demand all over the place. I mean, this is order flow, is how the market moves, but they usually get trapped. And also by the end of this video, you'll be able to actually understand why most traders get faked out. This is the key point, why most traders get faked out. So stay tuned. This is what you will learn throughout this video. Supply and demand is simply where institutions place orders. A supply area is where sellers dominate. This is where price drops. As you can see, we can define this as a supply area because of this fast movement, right, to the downside. As you can see, that candle, this is our M30, so that's a 30-minute candle. Such candle movements show us, right, after a slight consolidation of a supply area being created, or rather a base area or a supply zone, right? This is where, as I said, this is simply where institutions place orders. So this is where we would be interested in getting involved into the market, as obviously we confirm it with the market structure. All right, so as you can see, what we have right here, we've got this supply zone being created, right, and a very sharp move to the downside, right? The key word here, or the key thing that you should be looking out for, is, you know, the momentum out of that area. That will tell you how strong a supply zone is. So it's not just about, you know, drawing out every supply zone that you find on the market, right? It's about being very selective as you move with the market structure. Right, so as you can see, this is defined as a supply zone. As price makes its way back to the area, all right, as price makes its way back to the area, that is where we are interested in entering the market. As you can see, that's the exact sell model that was used for this trade that is here. I'm currently holding this trade. I took this last week. As you can see, this played out on a Friday, right? So today's a Monday, new week. So I'm still holding this, but as you can see, the sell model on that was basically the same. And that is a very, very simple sell model that we actually look out for, right? If we have confirmed the market to be in a down phase, that is when we would want to see continuation to the downside, a drop base, right? So this base is the area where we are looking out for sharp movement, right? This base area right here. This is the area where we are looking out for sharp movements, right? We want to see sharp movements from that area, right? And those sharp movements must be able to break structure, right? So it's a very simple sell model, but goes a long way if you actually master it, right? So this is where we would see a candlestick formation where, right, you have some bullish candles playing around. So this can be an example of what can happen at that area, right? This right here could be a bullish candle, right? There, that's a bullish candle. And what would love to see at that supply zone is something like this, where, you know, we have a sharp movement. In this example, it could be a bearish engulfing, but that is what we really want to see at these supply zones, right? Remember, we're only looking out for strong supply zones. We just don't trade everything, right? We're only looking out for strong supply zones. So this area then becomes my area of interest, right? It becomes my area of interest, meaning this is the area where I would love, you know, to jump into the market, right? And this can be applied by both, right? If you are a trader who likes, you know, executing instantly, you can wait for this. And, you know, with TradingView, I believe you can even place price alerts, right? That if price makes its way back to that supply area or your entry, points of entry, you will be notified. But this is basically where we would love to enter, right? And as we enter, we will take the market to the downside. A very powerful entry model because it gives us very good risk to reward, right? Because in this case, if we enter right here, our stops will be a few pips just above that supply zone, right? So a few pips just above, and our targets are previous structures. In this case, our target could be the lower low, because remember, as market is moving down, we are creating lower highs and lower low. So in this case, for a sell example, that is when we would want to see, would want to see a lower low. So that area can be your target. We can use such structures as targets, right? But remember, the keyword here is being selective on only choosing strong supply areas. And demand is very simple. This is where buyers dominate and price will give us a rise. So as you can see, right at this area, we had a drop base rally, right? That can be also used as a buy model, right? But in this case, you'd be counter trading, right? So you're going trading both directions basically, which I don't really recommend if, you know, you haven't really had much experience with supply and demand. But you can really change your results if you just focus on where the market is headed. In this case, we are moving in a down phase. So as you can see in this example, this is demand, right? And we can see that by this fast movement. So this can also apply on the buy side, right? The example that I just showed you can also apply on the buy side, and we wait for price to come back to that area, right? Why? Because supply and demand is simply where institutions place their orders. So when they come back to fill their orders, this is where we, you know, look to get involved into the market, of course, with different confirmations that we're going to look at later on, right? But, you know, the mistake with people is they mark every zone, and that's why they lose, because, you know, there's a lot of traps and fake outs into the market. So for somebody who's not really experienced or has much, you know, knowledge trading supply and demand, they usually get confused. So the first thing, as I'm saying, you know, looking at this chart, this is something recent. I actually said this as a free signal in my Telegram channel. If you're not part of that, do find the link in the description below. But just by looking at this M30, we can see that the market has been giving us lower highs, right? The market is moving away, and we are clearly in a confirmed downtrend as we see these highs getting those highs getting broken, right? We are now in we can identify a downtrend, right? As we can see, price gives us a drop, low, lower high, right? Giving us another low, right? So basically what we are looking for here is we want to see these supply areas getting created at areas where price can consolidate, right? As you can see in this case, that was also a nice area. So if you just wait for such, right? If you just become a trader who waits for such, in this case, if you're looking at this market structure, what you'll be able to see is price is just moving in a down phase, all right? But what you actually want to wait out for, as I showed you on the example, is you want to see the fast moves. And this is one of my favorites when we identify an engulfing, right? All I'm looking for is then price to make its way back to this area, and I can go in and look for sales, right? So there are other different types of confirmations that we'll look at later on in the video, where, you know, they're more conservative when making entries, and we have a little bit of, you know, an aggressive approach where we instantly just execute when price gets back to such an area, right? So that's also what we're going to be talking about. But in this case, that's exactly what we have. As you can see, the fast move, we got the fast move right at this area, right? We got the fast move right at that area. So it's very simple. If we, you know, look at it from this perspective, what's basically happening is price, all right, is in a downtrend, clear downtrend, right? Price is making lower lows and lower highs, right? And as price is moving, remember, when we look at it like this, it's very simple. But when you're now trading, there's a lot of traps, a lot of fake outs that come through as structure pushes, all right? So what we are basically looking out for is a lower high being set and a very strong move away from that area, confirming that the trend that we are currently looking at, because in this case we are looking at a downtrend, right? That is the trend that we're looking at, a downtrend, right? So us waiting for a sharp move, right, is confirmation that this downtrend is confirmed. This downtrend is confirmed, and the sharp move also gives us confirmation on how this area, remember the keyword or the key area that I want to look at is this area, all right? It's a very important area for us, right? Because we want to see imbalance as well with that from those sharp moves, right? We want to see that imbalance, because when we have that imbalance, we know for sure that we will have a move back, all right? Or rather, we'll wait for a move back and look to sell from that area, and we take it down all the way to the lower low, right? So this is basically called your safest take profit. This is the safest area for you to take your profit. Regardless of what time frame you're trading, you can use this area as your safest take profit. As you can see, this is the beginning of this corrective move, all right? And that's the lower low, right? So this can give you very good risk to reward, as I said, with your stops just slightly above the area and your targets being all the way down here, right? But of course, it doesn't always play out like this. What you have some of the times, and as I said, this is where most traders actually make mistakes, right? When they get faked out, right? Now, how do they get faked out? In this case, if we have a downtrend, right? We are in a downtrend. What is being validated right here rather is our traditional supply, or rather support and resistance trading strategies, where you know, when this happens, this is your supply, your support, right? And if it's broken, it turns to resistance, right? So these concepts, or rather these strategies, have to be validated at some point. A lot of people use this, right? But I'm going to show you the types of traps that can come your way, right? Trading supply and demand. So let's say we are in a clear down phase, all right? Clear down phase, we have confirmed that this is a down phase, right? Okay, let me just clear this out so that it doesn't confuse you, right? We have confirmed a clear downtrend, Price is moving down, right? And what we are saying basically is we can have our explosive move from this area, right? From this base area. And this is when we move, right? Moving down, right? So what you can actually see right here is as the market moves and validates retail traders, right here is a support area which is now turned to resistance, right? So the areas where we should be actually looking out for a strong move for us to be able to draw our supply zone is this area, right? Where we identify the strong move, right, is where we want to target as an area of entry, right? So in this case, this will be an area where we can identify a candle like the example I showed you of the engulfing, right? So most of the time, this is what will happen, right? The first move is here. Price consolidates for a minute, or rather validates this break and retest. So in this case, what is basically happening here is it has probably hit this area 3 times. You know, a retail traders validated, their stops are just above. But our true zone, right, or rather our true supply that we're looking out for is right here. All right. What price will then do is price will make its way back. All right. Make its way back. All right. So you need to understand that a scenario like this can be used as a way to trap a trader. So most traders, when price comes back to this area, what will be happening here is traders are looking to sell. All right, because of this area, traders are looking to sell. Right, and obviously their stops will be above that area. So this area then becomes a pool of stop losses. And what will eventually happen is price will then come into the area, right, and move down, right? So this simplifies the supply. Supply and demand is simply where institutions place their orders, and this is where we want to get involved into the market, right? So remember, first thing to look out for, how did price leave that area? Did price break any structure? In this case, if it's a downtrend, did price give us a lower low? Right? Did price make its way back? Is there any manipulations in place? Right? You need to look at that, where you identify such, right? Where you identify such. This can be used as a way to trap traders, right? And usually, this is where you get fast movements, and that is why I'm saying these areas are better, because they give you a very good risk to reward on your trades, right? If you make a mistake and if it's wrong, you do take your loss, right? No over risking, no over trading. Don't let FOMO get to you, because a lot of people will have a losing trade right here and not just sit back and look for a fresh opportunity, but will be all over the place again, not really being selective on the types of zones they're trading, and this usually leads to losses or you blowing your account. So that's for the supply side. So this can also be applied on the buy side, as I showed you right here. As you can see, this can be your demand. Price comes back, right? For the demand, we can keep it very simple. For demand, we can keep it very simple. What's happening for demand is price can either be on the way down, right, reach a demand area, and then something like this will happen. So this will be our key area. Why is this our key area? We want to see the fast moves from an area like this, right? We want to see the imbalance from an area like this, fast candles, right? Because we know that these strong areas are where the institutions place their orders, right? So us seeing fast moves validates these zones for them to be good prices for us to, to look out to enter into the market, minimizing our risk and maximizing our profits. So in this case, as you can see, this zone right here is the reason why this structure was broken, right? That structure is broken. And so what we'll wait for is very simple, right? Is a move back to this zone, right? As the market ebbs and flows, a move back to this zone. And then we can look to target this area, right? As this can be our safest take profit, right? But the same can happen, as I said, at these areas where people are manipulated and there's a lot of fake outs. So where market is in a down phase, right? We have a break of structure and we have something like this, right? So just by looking at this already, I can validate a lot of strategies which can be used by other traders. In this case, we are looking at this area. This is where our fast moves are, right? And we can also see the shift in price in market structure, right? That being the higher high. So most people is when they see such, retail traders that trade support and resistance validate this area to be a head and shoulders, right? They buy, of course, with their stops being below, right? We are looking out to enter our trades at this area. All right, this is where we are looking to enter our trades. So basically, such an area is where we would love to see something like this. All right, this can be a bearish candle going down, and then we see something like this, where from this area, probably this area, we identify a burst in price. In this case, a bullish candle to the upside, right? These are the areas where we want to focus on, right? We look out for such patterns, right? So such can happen where as the price is moving, right? As the price is moving, price will do something like that, right? Where people validate this as a valid area, right? Or a head and shoulders, not knowing that the actual orders are actually right here, right? This is a strong area for us to actually look out for buying opportunities, right? So what will happen, of course, is that we'll get faked out, right? Something like this can happen. It will come and then, of course, make it for the upside, right? So this is a simple explanation on supply and demand and what types of, areas to choose. So as you can see, from when we took this trade from this area, price continued going down, breaking more structures, right? Came back to this demand and actually reacted to it and made its way back to the supply. So this supply is valid, as you can see, right? And look at how price got to that area and dropped, right? And from that area, another supply zone was actually created at this area right here. Might not be clear here, but if we go to the M15, this is what we see. A drop, we have a clear drop, right? We have a base area and we've got a strong move away, all right? We've got a strong move away. So we would be marking out this as our supply, right? We are marking out that area as our supply. And as you can see, the types of movement that happened, in this case, this was going to be a bit difficult. I was probably going to pass on this one because it was on a Friday. So as you can see, price actually made its way back to the area, to the supply zone where institutions place their orders late. So I wasn't going to trade this one. But as you can see, so far with what has happened, price has actually continued breaking structure. Right? So if we look at it from the H1, this is what we see. All right, this move broke this structure. All right, that move broke that structure, made its way back to the supply zone. And so that area right there would have been another point of entry for us, right? If we're looking to add on trades or just jump into the market today. So stops would be above. In this case, you're risking something like 7 pips and minimum target, you're looking at 30 pips at least. But if you look at it from the higher time frame, we can even look to take it all the way down here. This is now looking at the H4 time frame, right? We can look to see another push down to this area, but we'll talk about that later on into the video. In our next you can mark valid zones, right? How to mark valid zones. And we basically have 3 golden rules that I want you guys to follow or that we use when marking our supply and demand areas. In this example, I've got a sell model of a trade that we actually took. This is JPY. This was the signal. Now VIP, as you can see. And yeah, you can see what happened on that, right? That was on KJPY. So I'm going to use that as our primary example today on, how to mark supply zones, right? So rule number one is the first thing we want to see is a strong move away, right? We want to see a strong move away. If price leaves slowly, the best thing to do is to ignore it, right? Because usually it will not hold, right? But if price explodes, as in these fast moves, this is where the money is. Meaning, remember, we said basically supply areas is simply where institutions place orders. All right, so we want to see these bursts of price moves, right? Fast, strong moves away. That then becomes the base where we can mark. So in this case, I would mark this low, all right, as this was the bullish candle and the high, right? And as you can see, what we have, we've got that engulfing candle, right, which went all the way down. Remember, that's our first rule, right? That's our first rule. We want to see a strong move away, all right? And then rule number two is we want to see a, very tight consolidation and no messy candles. So you do not want, obviously, to be trading candles with, 50 pips spikes, right? You want a very tight consolidation and a clean base, right? No messy candle. So if we can go to the M15 time frame, let us try and see if how that area was. So there you go. In the M15, this is how the structure looked like, and of course there were we also gave you the opportunity to be able to filter this out and rather mark this area as the supply area, right? So already, right, you already have some confluence right there. Right, you have a build up of strong moves away and a clean base, side consolidation, no messy candles, and a very clean base. So this is the area that you should be focusing on, right? Because you can see this burst of price and how price then made its way down. In this case, price then pushed all the way down, giving us 3 levels, right? Level 1, level 2, and we identified a level 3, right? So price was making its way back to the area. Why? Because this is where institutions place their orders, right? So as you can see, that was actually an area where you would have entered with your stops just above, right? And take profits down here at the beginning of this retracement, right? As I mentioned in the beginning. So if we can zoom out on this, you can see how this played out, right? Very simple structure. Price is actually just hit into that take profit area right there, right? And then the last rule is rule number 3, which is fresh zones only. So what will happen is most of the times is, as you can see, this was a fresh zone. This was the first time price was pulling back to the zone. Very important, right? First time price was pulling back to the zone, because if this is the area, price gives us the first pullback, right? If we get another pullback, it is no longer a fresh zone, right? If you get another pullback, although it can play out, it is no longer a fresh zone, right? That's something you need to keep at the back of your head, right? Once price hits into a zone multiple times, that base area weakens, right? So all those orders are observed. That base area weakens. So what you'd want to look out for, to make sure that you mark valid zones, is you want to look for strong moves away, a clean base supply zone, and fresh zones only, right? Don't be all over the place, right? First thing is you want to understand your structure, right? Where price is heading in the higher time frames, right? And which areas you're looking to target, just based on what the market is showing you. So as you can see from that area, what we had as price was moving down, we had this area, this move, drop, base, drop. We can identify the strong move from this area, right, marking up that high. And as you can see, price didn't really give us long move to the downside, but what we can identify here is price did make a pullback into the supply zone, as you can see, from this area, drop, base, drop, and pull back into the area and move away, right? But as you can see, just by looking at this, right, you can see that price was making its movement right at where we saw these bursts in price. So this was also a strong move, right? As you can see, all price did was price reacted at that same zone, right? We had a reaction, multiple reactions at that area, right? This is what we're talking about that area not really being that strong. But in this case, we'd understand that the trade was right here at the pullback. Price did actually go back into the area, right? Those orders getting filled and price had to move away, right? So that's a very simple way that you can use when approaching zones. All right, so next we're going to talk about most common mistakes traders make when marking these zones. In this example, I've got an example of a sell structure coming from a strong supply zone, and of course what we'd expect would want to see price moving back into the supply zone and a move that moves away from it. That's our point of entry, exactly an area where we would love to enter the market, right? A price back, a movement back to the supply zone, and a continuation to the downside. So in this case, we're going to talk about 3 common mistakes people make, and number 1 is entering immediately at a zone, right? Even though no matter how good a supply zone looks, right? But of course, this also comes with experience as you learn to be able to filter out these zones, and that is entering immediately at a zone. So obviously, what you'd want to see as price moves back to a zone is, the first thing is you want to see a rejection of that price point. And of course, this can become simplified as we also move down to our shorter time frames, as we refine these zones for us to actually get a good zone with less risk. All right, so what you want to see is a rejection of price when price gets into this supply area, and see a rejection, right? So a rejection will be a confirmation, right, for you to actually continue selling to the downside from that area. That is more of a conservative approach. But remember, this rejection, this is something you can look for probably in your shorter time frames, right? Whatever time frame you use for your entries, of course, right? So that could be another thing you can work on as well, according to your trading plan, is not just entering immediately when price gets in there. Yes, it can give you a better entry point into the market, right? If you are that type of trader. So you just have to figure out what works well with your trading method. Right, so that is waiting for a rejection first, right? Very important. You need to wait for confirmation when price makes its way back to these zones. Remember, we said we are working with fresh zones. So this would be the first time price pulls back to that zone that we are looking at. Right, and mistake number 2 is ignoring liquidity sweeps, right? Another common mistake people do, and that is when they ignore the liquidity sweeps that are shown, right? So what will usually happen is, most of the times, it will not just be as simple as price breaking out, as we and us waiting for a movement back, right? It will not always be like that where this just happens, right? Most of the times what will happen is, right, as price has already dropped, moving to the downside, what usually happens is we will get something like this along the way, where the market doesn't really go back to the supply zone that we have marked, right? Price just plays around this area. What most traders will do is, instead of waiting for price to actually come back to our points of interest, they will start, looking at this as a supply area, right? This is where, supporting resistant traders are busy, getting involved in the market, selling when the market comes back to that resistant area, right? And most of the times this is where most people will, find themselves over leveraging or entering shorts here, those last bucks in that account, right? You find yourself entering shorts right there, thinking that, you even find people executing sales right here as the market comes to this area, right? Forgetting that price hasn't really reached that point of, points of interest, right? Price hasn't really reached. And which points of interest am I talking about? This area that's written strong supply zone. So what we'd wait for is we would rather wait for price to make a move, because usually that's what happens, right? Usually that's what happens, right? All these people with their stop losses here that we're selling here are taken out, right? Those orders are filled, right? Remember, institutional orders are filled and we move away, right? So that's very important. And you always need to have a confirmation, right? You need to have confirmation factors that you look at. Obviously, different factors of confluence as you build your trading ideas around these strong supply and demand zone. All right, so in the next model, we're going to look at the entry model. All right, a cleaner look at the entry model on the charts, so that you guys can get a better understanding of it. In this case, as you can see, this is your H1 time frame. And in the H1 time frame, what we had identified was very simple. We had a move going down, breaking structure, giving us a lower low, and we had the pullback. All right. When this pullback happened, we can identify the strong sharp move away given at this area right here. So what we're going to wait for is for price to move away, as you can see on this chart right here, from that supply zone and make its way back to the supply area, which is strong. Remember, we look to enter these areas as institutions place their orders at these points, right? So obviously, to minimize your risk, you always want to understand what's happening from your higher time frames. So looking at this, we looked at it from the daily. What we can see in the daily, something very clear to see that price is actually moving away from this structure zone here. We had a drop, right? We've got a drop, base drop area there, as you can see. All right, so this is in our daily. So that's just where price went back to and tapped, right? As you can see, price has tapped around this area multiple times. So as you can see, when the last time price did this, previously on this tap, right, price made away, giving us that lower low right there. So that is the reason why with this move, it's the same thing I'm expecting for price to make it all the way down to these lower points. So looking at the 4-hour time frame, if we just read the structure from the 4 hours, very simple to see. Price is coming from a supply area, right? And as you can see, not really the cleanest of price action, as this pair tends to leave a lot of pins if you look at the previous structure, right? But as this market is ebbing and flowing, what we can see is we had this base, drop, base. So whenever all this was happening, all right, it's advisable most of the time to actually just sit it through, so that you only execute or start stalking a pair when a setup starts showing. Right, so in this case, as the price was pushing down, this is the zone which was actually responsible for the break of this structure. Right, as you can see, it broke structure. Remember, we're only focusing on this area right here, this drop, base drop. Right, so as you can see, after this area, that zone broke structure, price then made its way back to that supply zone. Right, so if you're just looking at this from the H1 time frame, what would be happening here is if you're going to be aggressive and not really wait for confirmation, you would be risking something like 10 pips, you know, just give it some room, 10 pips on this, right? And obviously at least target at least 30 pips, 1:3. But in this case, we're actually looking to take this, lower. So from that entry point, we'll close our profits down here at the structure point for like 68 pips. But remember, that's for the aggressive approach. So in this case, if you wait for confirmation, in this case in the 1 hour time frame, what we had is, as you can see, this bullish candle, and then we identified the rejection, right? The rejection candle right there. So after the closure of that candle, that is when you can execute. Of course, now your risk might vary depending on the type of time frame that you're going to use to enter the market. But in this case, if this is the H1 time frame, if we move to the M30, remember we dropped down lower to shorter time frame so that we can find better entry points for us to enter the market and minimize our risk. So this is the M15. In the M15, what we can basically do is we can filter this supply area. As you can see, this is more of a sharper supply zone with that strong move away from it, and that area right there, that is exactly where price tapped into. So in this case, your confirmation would be this bearish engulfing, still a valid confirmation pattern if you're going to trade this from the M15 time frame. So a closure below and stops above, you'd be looking at risking anywhere from 8 pips. So you can even go lower if you understand your points of interest. Right? The problem is now when people don't know how to mark out the right supply or demand zone, and it would be very difficult for them to even filter out these trades and go to shorter time frame, because it's pretty much messy for you to go to shorter time frames without really getting a strong zone. Right? That is where you will get a lot of fake outs and probably find yourself over trading a lot. So very simple market flow, as you can see from the H4. And this is basically what we were looking at also from last week on the NZD, because when we closed CAD JPY, which I did speak about, we also looked at NZD JPY. If you're in our Telegram channel, you would remember me sharing updates. As you can see, markings on this chart, as we were also short on NZD. So I was pretty much short on JPY pairs. So NZD JPY looked interesting as well. CAD JPY was interesting. So now we are trading NZD CAD. So just waiting for price to make its push down there. As also, this is a valid demand area. I mean, look at how price left that area. So that would be an area where I'll definitely like to take my profit, as anything can always happen. Right. So if we look at this from the BCMM side of things, this becomes very simple. In the M15, what we can see is this is a clear peak formation inside, right? Clear peak formation. You can see how price moved away from that, giving us that level 1 push to the downside, giving us another level, being level 2, sorry, and we had the last level, right, being our level 3. So in this case, all that happened is this movement back to this area was still part of level 3, but remember, we had a 50 and 200 crossover, EMA crossover right there, and the next trade that we look for after that, in line with the peak direction, is a trade after 200 EMA, which is what came through at this area. So this was also another factor of confluence in the M15, as this was a safety trade. All right, and if you missed it on that first leg, you also had another opportunity to enter when that price point was tested again at that level. So this is how you can actually just use clean price action to determine the right order flow, and it will make it easy for you to also count your levels as you start counting your market maker levels, right? And this can be applied for any time frame, right? But it's always good to understand what's happening in your higher time frame, right? It's always better to understand what's happening in your time frame. Another thing we can look at, and this is for more confirmed points of entry. So what usually happens is we could get something like this, where we've got a drop, right, a base area created, and then a move down, right? And in this case, what we are looking for is we are looking for a move from this supply area, right? And as I said, one of the mistakes people make is they don't really wait for confirmation, and they just jump into the market and market gets back. But what you can do to be more conservative, as as the market flows, market structure will always validate these moves. So what you can do is, if price then hits this area and rejects the area, right, instead of actually trying to jump in at that area, what you can wait for is a confirmed change of structure. So in this case, as the market is retracing, right, this is a higher high, higher low, higher high into the supply area. So this low should be very important for you, because what we'd want to see is, we would want to see that area get broken and the market coming back to the supply area for us to continue trading the short. This is a more confirmed approach, as it will always be in line with the market structure. But the main entry point, as you would know, would be this supply area, right? That will be our main entry point. So don't let this confuse you when you see that. So that's the same thing that you would have done in the H1 time frame if you didn't want to go aggressive at this area. As you can see, as the price was moving up, we had this low which was broken, right? So that low was taken out right here, right? With this move right here, took out this low, and then look at what happened. The reason why this area was taken out is because of this newly formed supply zone, right? So that is when price then went back. This is more confirmed, right? This is more confirmed, then you can enter your trades right there. In this case, it would have been a good entry point either way, right? So that's how you can then minimize your risk. And of course, you can take it down to the shorter time frames when you have identified such. As you can see, this is the structure breaker that I'm talking about, and the retracement back, right? So it's always good to wait for a setup, because what will usually happen is you'll end up finding yourself shorting the market right here, and it just stops just at this region, and usually that is taken out. So it's very important to just stick to your entry model and refine it as much as you can. All right, guys, so hope you learned something from this video. Don't forget to leave a like, hit the subscribe button, and leave a comment. Cheers.